It's Sunday, the 17th of January 2016. This is a daily chart for Regis Resources. I've done these videos now for about a year for Regis, and it's been one of my favorite stocks in that time. Um, and I've been calling for it to break out above this 220 level for a few months now, since I did my last video, I think in late November. And then eventually it cracked through, and it was helped by the being added to the GDX Gold ETF. The GDX has companies of 750 million US market cap or more, and Regis was added to that. And as a consequence, the GDX had to buy 30 million shares, which they did on this big volume spike here. You can see it's dwarfing everything else there. So that really cracked it above this 220 level, which was the breakdown. I think this is when they had the grade issues at Gardenwell at the start of last year. So since then it's been holding that level quite well, even with the gold price weakness. I know this is toward the top end of a lot of analyst valuations. I don't think there's many who have got a valuation above 220 or 230, so it's really trading at those prices at the moment. The thing with Regis is, I think for a long time when they were the premier gold stock on the market for these 2 or 3 years here, they were always trading above valuation, and good companies often trade above valuation. I know Northern Star is also in that sort of boat as well. A lot of analysts have got sort of 250 targets on that, and it's trading at 280 and has been for a while. So the good companies are always thinking one step ahead, and the market's sort of, I guess, building that into the share price. So it's trading above analyst valuations, which are often based on, I guess, the previous information, not what the company's planning to do. And I know Regis, they haven't announced what their plan is for their new satellite deposits, but I'm thinking they're probably going to be producing another 30 or 40,000 ounces for them next year. They've announced the contract, so that they've awarded the contract to Maca to develop those pits. So I can easily see Regis getting a good little kick on. The quarterly Regis release was also excellent. They released that on Wednesday, I think. I've got it here, and you can see they produced 75,000 ounces, with the top end of their guidance is toward 300,000 ounces for the whole year. So they're tracking nicely on that 151,000 ounce produced so far. But the most important thing is this cost. So that they're down to 918 Australian dollars an ounce for an all-in cost, and that's the best on the ASX really for anyone producing, over above 100,000 ounces a year. Northern Star is producing about 1050, so 918 is really a really good result. I think that's probably a one-off. There was some really good costs at the Rosemont operation. You can see here they got to less than $800 an ounce, which is by far the lowest number I think there in the last 12 months. But I think that'll push back up again when they do a bit more pit development next quarter. So that's that $50 million cash flow. It's still, the thing about Regis is the predictability of results, and that's what the market likes, and that's why it trades at that premium, and that's what had broken down in the last year or so. And I think that's really starting to come back, and if they keep producing those numbers, it's hard to see it going down in the current gold price environment. I know on Friday night, the gold price in Australian dollars went up $40 an ounce, and the Australian dollar has cracked down to 68.5, which I think is maybe a new low for this cycle. So there's plenty more downside left in that Australian dollar, it seems, with the current market sentiment. So even if the gold price stays steady in US dollars, it looks like the Goldilocks scenario of a falling Australian dollar and a stable or slightly rising US dollar gold price is what's happening. So that, Regis making $650 an ounce margin last quarter. So that's tremendous money being made. There's not many better businesses than that at the moment on the ASX. I've got a couple of levels here above. I think this 260 level, 270. I mean, that looks like a good resistance level as well. There's a lot of selling pressure here, so it might take a bit of churning through unless we see a dramatic increase in the gold price and sentiment. You might take another month or two for it to really get another kick on and churn through some of these sellers who are following those analyst valuations. But I think when these guys release their mine plan and the market starts to factor in where they're going, not where they have been, you could easily see this sort of 270 level come into play, and later these levels around $3 as well, where you can see this massive gap, which I think was the flooding of the first flooding event in February last year. So that's a target more toward probably the mid to later half of this year if they keep kicking goals on the production front.